Fundamentals tell you where to look and technicals tell you when to look. I'm learning from people who invest in gold. I've never traded a commodity back then, so I learned from them, they learned from me, and it's just like-minded individuals with shared goals. I've been in a couple positions for the last 5 days. I've got a couple positions I've been in for weeks, and if things go really well, I'm in a position for a bunch of months.
Welcome everyone to another episode of the podcast. My name is Mariusz Konieczny, and today I'm chatting with Dan from the Chart Guys. Dan, thank you very much for joining me.
Happy to be here. Thanks for having me.
Yeah, so I've watched a few of your videos, and I thought it would be good to have a chat, but I was wondering if you can take a few minutes and maybe introduce yourself to my audience.
Sure. I'm Dan. I've been trading at this point about 15 years. I started teaching technical analysis and how I trade with the Chart Guys just about 10 years ago, and it's been a wild journey. We got a lot of popularity covering different sectors, crypto, things like that. But at this point, it's our longevity and the amount of uploads that we do of free content on YouTube that has kept us relevant. And so still having a blast trying to teach everybody what I know and the experiences that I've gained over the years. And it's been a lot of fun.
So do you consider yourself more of a trader or an investor?
Definitely a trader. I started as a swing trader back when I had $3,000, and I had to because I couldn't actively day trade. Eventually became much more of a day trader. And then as I leveled up in terms of account size, I started to be more of a scalp trader where, I'll do a lot of fairly quick positioning where, there's many times today, for example, I bought, Tesla breaking a new high of the day with a bit of size. I sell a third of that position a minute later and get my cost basis a little bit lower. So very active day trading. But again, 15 years into the game at this point, I'm very actively trying to get better at swing trading to get off the screen. Once you're putting in 10,000 plus hours in front of the screen, you realize, okay, this isn't sustainable. I can't do this for the next 40 years. I have to, prioritize other things in life. And so that's been a goal of mine over the last maybe 3 or 4 years is getting better at swing trading.
Can you explain swing trading?
Just an outlook in terms of time frame of days or weeks or even months. I've been in a couple positions for the last 5 days. I've got a couple positions I've been in for weeks, and if things go really well, I'm in a position for a bunch of months. But I have some investments in the sense that I've got Bitcoin from 2017 that's long-term, no touch. I've got SPY, the S&P 500. Anytime there's a big fear event, whether 2020 or something like that, I add a little bit to that. So there is some investment mindset with some of my portfolio. It's just the vast majority is day trading or swing trading.
And what makes you decide whether something you want to have it as a trade versus a longer term investment?
Really, it's got to be something that I am sure of in the sense that, again, the S&P 500, it's not going anywhere. So, I look at my dad, who's been doing this 30, 40 years just in terms of being a boomer who goes to his 9 to 5 and he puts money in the market and he has his retirement. And then, I just see older people, really. My friend's grandfather has $100 million and he buys and holds for decades. And so, okay, I should probably have somewhat of a strategy surrounding that. And with regards to, Bitcoin, it's just if I can get a risk-free position where, I sell enough where my cost basis is zero, okay, I'll hold this, for decades. And if it goes to zero, so be it. But that's my mindset on investments. I'm okay with it going to zero.
Okay. And so how long have you been making content on YouTube?
About a decade at this point. The Chart Guys 10-year anniversary is actually probably a few days away, July 2015. So just thousands of videos and live streams. And it's really a passion in the sense that, for the last decade, Saturday morning I wake up and I look forward to making a video to put onto YouTube. And, you can tell in the content that I'm very passionate about it. I have so much fun. It's just such a fun game in terms of the impact of psychology and, of course, the ability to make money. And that's what keeps it exciting all these years.
Okay. And was there a reason that pushed you into starting a YouTube channel and teaching others about technical analysis?
So back in the early days, I was navigating forums and things like that. Investors Hub was a forum, and interacting with people. And I was learning, right? I didn't know anything back then. And so, someone was generous enough to me on Investors Hub to answer some of my early questions. I was watching him do technical analysis before I knew what it was. And I was saying, okay, this guy is more right than most people. I want to know what he's doing. And so he was generous enough with some of his time to answer my questions and point me in the right direction. Go look up RSI, go look up, these things. And just that interaction, again, in terms of enjoyment, if I'm sitting here by myself clicking buttons and watching flashing numbers, it's fun. But when you're interacting with other people, it's a whole nother level. And, we would have free chat rooms way back in the day, just interacting with people and people sharing how helpful it was. And then I benefited as well. It's a mutually beneficial, I'm learning from people who invest in gold. I've never traded a commodity back then. So I learned from them, they learned from me. And it's just, like-minded individuals with shared goals. And that's a very powerful thing in terms of magnifying, your leveling up as you're trying to master a certain subject.
I am mostly personally, a long-term investor. I hold position for years, but years ago, I did study technical analysis. I, read a book on technical analysis, but I think it has a lot to do with personality. Certain personalities, want to gravitate towards technical analysis. I gravitated towards more of the fundamental and holding things long-term. But there seems to be camps of people that, I only do this way, I only do this way. But then there's also a camp where they like to, combine fundamental and technical. And I was wondering if you have thoughts on those subjects.
Absolutely. So let's say it's a spectrum. You've got 100% technical analysis, 100% fundamentals. The only two wrong places to be on that spectrum are at both ends. Anywhere in the middle, if you're 90% fundamentals, 10% technicals, great. That's your style. You're focused on balance sheets. You're aware of what a trend is. You're able to look at a chart and know what it's showing you to a certain degree. And likewise, for me, I would say I'm 90% technical analysis, but my 10% fundamentals, it's, I have a trader friend who said that fundamentals tell you where to look and technicals tell you when to look. So, if I know uranium is getting a lot of attention because of, the power needs of AI and things like that. Okay, I'm going to look at the uranium sector and then I'm going to use my skill set of technical analysis to help me pinpoint my entries and exits and positioning and things like that. So, I think it's you have to blend the two, and that's what the best traders in the game these days are doing. Technical analysis has gained in popularity significantly over the last couple of decades, of course, and the people who we look up to are utilizing it to a certain degree.
And so for those that don't know much about technical analysis, what is the foundation behind it? What's the the basics of it?
So it's really, I view it as it's depicting human emotion on a screen. And, it originates all the way back in the 1800s. Japanese rice merchants invented it and were using it to get an edge in how they were trading. And really, the candlesticks are just showing you the price, right? So the opening price, the closing price, the high and the low of the day. But when you aggregate that information over a long period of time, you can recognize trends. There's different patterns and things like that. And, there's no one size fits all. There's no, this is the right way to do it. This is the wrong way to do it. Everybody has to develop their own style through trial and error. I love euphoria breakout plays. I love things that are in blue sky breakout, technology that's new and exciting, or law changes, things like that. Quantum. 2 years ago, if you asked me, do you trade quantum stocks? I'd say, no, I can't name a quantum stock. And then, over the last year, quantum stocks have been a big part of my day trading because they're extremely volatile. They ran thousands of %, and it's just my style. But back to your question, technical analysis, it's showing price action. It's allowing you to identify trends, and it's most importantly for me showing human emotion. It's showing extreme euphoria, it's showing extreme greed, and what we need to do as traders is literally rewire our brains. Our brains are programmed a certain way through, hundreds of thousands of years of evolution. We have to train our brain to do the opposite. We have to be looking to buy when everybody is panicking, and we have to be looking to sell when, everybody's looking for another 100% move higher because everything's so great. And that's the hardest part of trading.
And what if, let's say, I have a position that I plan to hold 5-10 years because I like the company, because I like where they're going. How could I combine technical analysis with such a long holding period?
Yeah, I mean, you could use it to obviously looking for your entry point, but let's say you're already in. I like to use it to hedge at certain times. If I've got S&P 500 exposure that I'm not going to sell for decades, but I can see on the chart, okay, things are a little toppy, things are a little euphoric. I then hedge my exposure by, grabbing, bearish leveraged 3 times ETF, grabbing a position of that to offset things a little bit. And, my goal is to outperform the S&P 500. So if it's going to dump on, tariff headlines and things like that, I can protect against that a little bit. So, let's just say your long-term position is a tech company, whether you're grabbing a short in that to offset things a little bit, or even just, a short of the NASDAQ, that would be one way to potentially, ride some of the significant moves that we see, 40% drawdown, but knowing you're not going to sell for years, it makes it a little bit easier. It makes you have a little bit more control.
I noticed something because I mostly focus on small microcap stocks, and I notice people are utilizing or trying to utilize technical analysis on those small names that don't have as much volume. And what I'm noticing is that they see a certain signal and then they react to that signal, causing the thing that they were predicting, but they themselves are causing it. And I was wondering if technical analysis has less use for smaller names with less volume, or it doesn't matter.
It does. Volume and liquidity is a factor. I have my bare minimum. I need average $5 million traded a day if I'm going to even look at something. If there's gaps on the 5-minute time frame, that will show us a lack of liquidity. There's not a ton of shares trading hands on the shorter term time frames. So it does matter. There is technical analysis is less useful on things with low volume and low liquidity. And you are correct. Technical analysis is a self-fulfilling prophecy to a certain degree. And, I like that. One of my edges is playing short-term oversold bounces in a long-term breakout uptrend. And, a lot of people say, why would you give your edge and want to teach other people this thing? Well, the more people that use it, the more it's going to keep working. And, I'm A-okay with sharing what my edges are as a trader. And that's one of the reasons why.
Okay. So a lot of my listeners are interested in ADUR Clean Technologies, ADUR, which is a stock that I sent you because I wanted you to see if you can analyze and tell us what you see. So if you could share your screen, that would be great.
Sure. So this is the most common. It's a good day today, right? Nice big green candle, good volume today. But what I'm seeing on this chart instantly when I look at it is the most common pattern that you will find in stocks. I call it an equilibrium. Some people call it a triangle. It's just a series of higher lows and lower highs, and your range is constricting. And then you look for that range to break to give you the next bit of information. And I bet the NASDAQ, just real quick, NASDAQ was doing it before I came on here. It shifted a little bit, but just a tightening range. Again, you got your lower high, your higher low. You're just tightening up. So AUDR going, or what was it? ADUR?
ADUR.
ADUR. So going back to it, what you have here is a great breakout over April, May, and now you have a new price range that it's trading within. And the way I visually imagine what's going on is, the old school scales, like the justice scales that balance like this. It's just supply and demand trying to find what is the new fair value of this stock, because it's, we've been trading prior history down in the 4s, the 5s. the 10s, the 11s, this is all new. So this is the market digesting this new range. And just as a comparison, looking at the previous history, back here in September of 2024, we were doing the same thing on the weekly time frame. So this is every candle is a week of trading, but we had a breakout to a new range. We find a support, a resistance, we're tightening up, tighter, and then the market says, okay, we're fair value, and then on earnings, it looks like, or a bit after earnings, probably a news headline, boom, now demand exceeds supply again, so we get another leg up. So what's going on right now?
So actually in November, what happened is that they uplisted to Nasdaq because they were trading on a Canadian securities exchange, and so like you're saying, that was the headline that made it break out, right?
Yeah, and that's a big one. You look at the average volume, the 20-week average volume, it was nothing. You're trading $500,000 a day or a week back then, and then that week you can see this orange line down here is your 20-period average volume. So your average volume for the last 20 weeks. And we can see that it's significantly increased since that uplisting. And so, obviously adding liquidity, adding a lot of exposure to traders and investors. But what we're doing right now is that tightening range. So the most important levels to me, where we topped out, of course, up just under $12, where we found this support, then we set the lower high, and just now we have a higher low. So 872 is now a key support for me. Bulls want to maintain that level to keep progressive. We want a stair-step pattern. We want higher lows and higher highs. So as we're going to look to tighten up here over potentially the next couple of weeks, let's see if this momentum from today can carry through. But $11 is a very key level. And those psychological numbers often become the key points, especially on lower cap names. But what the bulls want to see is if we do fail $11 here into next week, we're going to look to keep tightening up. And then, of course, we want to break bullish from this sideways range and do it all over again. Have the market digest the new fair value and then ideally see demand outweigh supply yet again. So, if I were swing trading this, let's say, I made an entry today on a bull break of 912 resistance. I need to see that I think I said 871. It's 868. I need to see 868 hold. So I would put my stop loss a bit under that level, maybe 859, give a little bit of wiggle room. And if that level breaks, then bulls are losing some progress. But if that level holds, bulls don't have anything to worry about. And so, again, solid day, and it's all about $11 resistance from here.
So how would you view it if it breaks the 11 resistance?
If it breaks 11, again, great sign. We just want to keep... If I would be moving up, if it's not an investment for me, it's a swing trade, I move up my stop loss with the areas of support. So let's say we do break 11. The high of 1197 is then the most important level, and I believe that's our all-time high. So yeah, nothing better than a stock that's in price discovery mode in terms of its ability to follow through. But, let's just say we break 11 and then... Okay, we don't break the new all-time high just yet, but we set another higher low. Then I walk my stop up just under that new higher low. And just, an example of this, back to uranium real quick, this CCJ daily chart, I've just been walking up my stop loss with every little higher low that we form, and I'm close to getting stopped out now, but it's allowed me to ride the momentum and ride the trend. And so that's what a trader ideally wants to be doing. And of course, if you're a bull, you just want those stair steps, just a new support level, another leg up, new support, and ideally, as long as you can, keep that uptrend going.
How many positions at a time do you trade?
That's been shifting as well. If I'm day trading, I generally want to be focusing on one or two things because it's faster moving and my attention is needed. Swing trading, I'm getting more comfortable, again, as I'm shifting more from day trading to swing trading. Right now, as we speak, I maybe have 8 to 10 positions currently open. I've been bullish with the broader market strength over the last couple of months, and I'm keeping that mindset until the bears give me a reason not to be bullish. But I'm all over the place in terms of different sectors and things like that, and really is just looking for trends and places where I can get an entry. My style is selling partial position into an initial move that's in my favor, and then ideally just getting my break-even stop loss under a support level and letting it play out. And I love nothing, psychologically speaking, there's nothing more comfortable than having it be a scenario where, all right, if I'm wrong, I don't lose anything. And if I'm right, I make money. And I try and position myself in that way.
Okay. And do you take into account macro information or like money supply M2?
I'm aware of it, but it won't directly impact any trade that I take on. It's not that much of something I'm aware of. I'm of course following the market. I'm following the headlines, which the importance of social media and Twitter has changed drastically over my 15 years of trading. It's an ever changing game, which again keeps it exciting. But I'm aware of what Powell's saying. I'm aware of what the employment numbers are. But if it's a terrible employment number, but my stop loss doesn't hit, I don't care. The price level is what matters most to me.
How did the social media change technical analysis?
I can remember I made a video called Tweets Moving Trillions long ago because I saw it happen in real time. It was probably back in like 2018. And I saw an article posted, and it was having to do with oil, I think it was. But when this tweet came out, to the minute, it marked a massive shift in both oil and the broader market. And they both rallied really hard off of this one tweet. And I remember looking at that and saying, this is astounding at how much control, because of course with the automated trading systems and the bots and the algos, everything is intercorrelated and linked. And if you've got Amazon going up, it's going to move up the NASDAQ, which is going to move up Meta. Everything's interconnected. And so now you have, of course, the presidents and CEOs and world leaders are using this platform and many times giving relevant information for traders and investors. And you will see a tweet come out from Trump or whoever, and the price will react instantly, nanoseconds later. And you have to keep a pulse on those things. The first thing that I do these days is when I see a big volume spike and price action out of nowhere, the first thing I do is go to Twitter and find what that news is. Today, Amazon had a headline, sales in Prime Day are down 14% in the first few hours. And Amazon, I'll show you right here, but Amazon, on the 1 minute time frame, that's the response to that information, disseminating on Twitter. And the NASDAQ, which again is so much bigger, did the exact same thing. And it had this big drop in response to that as well. So it's almost like it's, I've got my chat room up, I've got my chart up, I've got my broker up, but I've got Twitter up as well because it's solidified itself as the leader in terms of its impact on financial markets.
Wow, that's interesting. Well, fantastic. Well, thank you very much for doing this. Do you have any final thoughts that you would like to leave my listeners with, and maybe share information on how they can find you, learn from you, and things like that?
Sure. So yeah, again, I'm not saying technical analysis is the only way, but I highly suggest, even if you're a fundamental investor, just putting in, even if it's a couple dozen hours to learning how to identify a trend. That would be the most important thing that I would suggest. And, there's what's very different also from the last couple of decades is the amount of resources available. The game has really changed to favor retail traders in the sense that we can get the same information as the professionals. We have all these resources that we can utilize in terms of education. We have fee-free trading in the US now. That used to cost $8 a trade or whatever it was. So, if you go to YouTube and look up the Chart Guys or chartguys.com, I'm putting out market update videos every weekend, and there's 10 years of hundreds of videos describing, what does priced in mean? What's debt and dilution? Even some of these fundamental aspects, as well as, how I trade fear climax dumps and things like that. So, you could spend a couple dozen hours on our YouTube channel very easily going through the different playlists and content from over the years.
Do you have any educational programs outside of YouTube?
Yep, on our website, I've got a course called Entries and Exits. I recently remade it just because, again, the times are changing. And I'm proud of that one in terms of giving, a nice overview. I think it's 6 or 7 hours long of, how to utilize technical analysis with determining our entries and exits in trades. And yeah, that's on our website, chartguys.com.
All right. Well, thank you very much for doing this.
Thanks for having me. Glad to be here.